credit unions are building up a big business in giving people mortgages. They've become an option now for people where they were never an option, because they tend to do personal loans. That tends to be the big thing that credit unions do. But increasingly, credit unions are now offering mortgages. And it's not just first-time buyers, it's switchers, it's people who are moving home. Recent figures, just new figures have come out showing that credit unions saw a 28% increase in the lending for mortgages that they're doing, the mortgage lending that they have done this year in the 3 months to September compared with the same period last year. The sector is close to 1 billion in mortgage lending at this stage, and it'll be able to increase this a lot because the rules were eased a bit for credit unions by the central bank recently, which will allow them to triple the amount of mortgage and business lending that they do. Why do people go to credit unions for a mortgage? Well, they like the fact that there's a personal touch. They can trust their credit union. The profits that a credit union makes, it's called a surplus, tend to go back into the community. It's not some big corporation making money here. And credit unions tend to have offices where you can go in and talk to people. So they're an interesting option for people. Credit unions are coming together now as well to offer a national credit union mortgage brand as well, to make it more easier for people to get their head around it, because each credit union offers their own mortgage loan and it may have a different interest rate. But this new credit union mortgage will have a national brand. It'll have a rate of 3.85% and that'll be capped. For the first 3 years, it won't go above 4.4. So credit unions are becoming a real option, another alternative, bit of competition for the banks there on the mortgage side. It's good to see plenty of competition in the market. That keeps everybody nimble and keeps it all competitive.